Hi guys! Welcome back to my YouTube channel. And it's been a while since I last uploaded a new video because of busy schedule. But anyways, in today's video, what we're gonna talk about are trading breakouts. How to anticipate them properly in order to avoid fake outs or fake breakouts. We'll also discuss some breakout trading tips, how to identify high probability breakout trades so that you will know which ones you should focus on and which ones are to be avoided. Also, I want to thank each and every one of you because we already reached our first 1,000 subscribers. And as a means of thanking you back, I will be announcing our first 1,000 subs giveaway by the end of this video. So make sure you stay tuned, okay? So without further ado, let's get started. In order to learn how to trade breakouts, we have to understand first what are these breakouts. A breakout is when a price moves beyond a defined support or resistance level, which is supported by an increase in volume or momentum movement. It could be a breakout from a certain chart pattern, a breakout from trend lines, a breakout from a range, or a breakout from the support and resistance level. For example, here you will see a bullish falling wedge pattern. Then price moves beyond this resistance level, breaking out from this chart pattern. Now, this is what you call a breakout. There are scenarios wherein this breakout turns into a fake out. A fake out is when price fails to sustain the breakout move and ends up moving into the opposite direction. Now, how can we avoid these fake outs? One thing you need to know is that you can never completely avoid a fake out. No matter how good your trading strategy is, no matter how good your setup is, there will be instances that you will still caught up by fake outs. But what you can do is to minimize the chances of you getting caught by these fake outs. So how can we avoid this? The first thing you can do is to stop chasing power moves. Power moves, these are the instances when a price moves tremendously with little or no pullbacks at all. Why? Because most likely in this type of move, the market will also reverse in a tremendous way. Now, the reason why this usually occurs is because when the price breaks out from a certain resistance and increases tremendously without pullbacks, there will be no floor to support this parabolic move in order for it to hold once it reverses. Unlike with the breakout move wherein there are pullbacks creating swing lows, there will be floors or areas that could support these higher prices when it retests or reverses. Once this parabolic move reverses, it will look for a floor or a support area to hold it and look for buying pressure in order to bounce from this area and create new swing highs. Now, the second thing you need to do is to trade breakouts with build-ups. A build-up is when a price consolidates and gets tighter and tighter until it moves in smaller ranges. Now, this is a sign of strength. Why? Let's say here in our previous example, the price consolidates within the range of the upper and lower trend lines as it gets tighter and tighter until it moves in smaller ranges. And then here you can see the build-up. Now, why is a build-up a sign of strength? Because the fact that the price can hold up on this area is telling you that either there is no strong selling pressure exists or there are buyers who are willing to buy at these prices, therefore pushing the price in order to hold up in this area. Now, whatever the case is, a build-up of price is a sign of strong movement, just like in this example. After it builds up here, the price breaks out and continues to go in this uptrend move. Now, the third one is to avoid breakouts where opposing pressure could push the price against you. Now, what do we mean by this? Let's say, for example, we have a selling pressure over here that leads into a huge decrease in the price market, and then we have here a market structure where the price is about to break out. Now, the tendency is, if the price breaks out from this area, it could go into this resistance where a possible strong selling pressure might come in place, which could push back down the price. So either you take profit right before the price hits this area of resistance, or do not enter at all. So now that we have finally understood what a breakout means and how to avoid fakeouts, let's now discuss how to trade breakouts. Now, trading breakouts can be one of the most profitable trading strategy because the price can move in huge amounts within a short period of time. But at the same time, it could also be one of the most risky because the potential of price instantly reversing or the so-called fakeouts are always there. Therefore, in order to avoid those fakeouts and have higher probability breakout trades, here are 4 things to look for before you enter a breakout trade. The first one is, the longer the range, the better. Now, what do we mean by that? We have to see the price consolidate or consistently bounce from a potential support and resistance area in order for it to accumulate a strong momentum for its breakout. Let's say in this example, we have here a 1, 2, 3, 4, 5, and 6 bounces from the resistance area. And then we go to number 2. There must be a build-up. Within this consolidation or within the range of this support and resistance, there should be a build-up right before the price breaks out completely in order for us to confirm that there is a sign of strength for its upcoming move. Now, as the price breaks out, we have to wait and look for the third thing, which is the retest. After price breaks out, it should retest on one of our previous resistance, which will now become our new support area before this price movement continues. Why? Because as we mentioned earlier, we want to see swing highs and swing lows which could act as a floor to support these higher prices that we are aiming for. Which is why we want to see the price to retest in this previous resistance and create new support area before it continues to go uptrend. Now, the fourth one that we are looking for is our confirmation candle. So, what do we mean by that? We are looking for a bullish candle that will close above our now support area, and if possible, another candle to confirm the continuation of this bullish move. So, in this example, we have this candle closing above our now support area and another candle with a big-sized body supporting a continuation of this buying momentum. Now we can enter our trade here. Set our stop loss in an invalidation point. So for me, I would put it here. And then as for the targets, I will leave it up to you. Whether you want a 1:3 ratio or 1:5, that will depend on your preference and risk tolerance. As for this example, I would set it based on the nearest next resistance as for this to be a conservative trade. Now, as you can see, we entered a trade here. The price hit our supposed to be target with 5% gains in 17 hours. And then it continuously went up to 15.48%. So that's how you trade breakouts. Now, before I end this video, as promised, I will be announcing our first 1,000 subs giveaway, which is a free 1-hour one-on-one mentorship wherein you can freely ask everything you want to know and learn about trading. Now, I will be choosing 3 winners whom I will have a 1-hour one-on-one Q&A session. There's just 3 things I need in order to choose who will be our winners. The first one is a screenshot that you have already subscribed to this channel. Second, a screenshot that you have liked this video. And the third one, a screenshot of your comment why you should be one of our chosen winners for the free 1-hour mentoring session. After that, you may send it on my official IG account at mmkcm_, and that's it. It's as easy as that. Winners will be announced by October 9 on my IG account, so make sure you follow, okay? So that's all for this video. I hope that you have learned something new from it, and I'll see you on the next one.